So I'm going to jump into this a little bit, give you a little overview of the market and where things are at across the board. We're going to go through it segment by segment, basically go through the industrial segment, retail segment, apartment market, and everything else along that lines. So we'll jump into it. Industrial market right now in the Tampa Bay area, the state of Florida, and pretty much the nation is the hottest product type there is across our country right now. I heard someone describe it the other day as the new apartment market, and it truly has become the new apartment market of this century. What's happened is that all of a sudden people discovered that a 1,200 square foot industrial unit is pretty much as easy as managing a 1,200 square foot apartment, except I don't have to go out and change the cabinets. I don't have a toilet to unclog. I don't have a stove that's broke. So my operational costs on that apartment unit versus my operational costs on an industrial property is about a third of the expense across the bay, but my rent is exactly the same. So what you've seen over the last couple of years is that the average rent in, let's take it, a 1,500 square foot workshop, what they call a small bay industrial workshop, went from about $6 a square foot before COVID, and today it averages $16 to $18 per square foot, triple net, not just modified gross. It moved $10 a square foot and added $3 a square foot in triple net costs on top of that. Here's a caveat to that. Our market is 99% occupied. We have less than 1% of small bay space available in the Tampa Bay market across the Pinellas County market, Tampa Bay, Hillsborough, Pasco County. Kind of get an idea on rent growth, where the marketplace has been, where it's going, where the forecast is. You've got roughly 2.4 million square feet under construction. Now this is both large bay and small bay. What do I mean by large bay and small bay? Small bay is anything from 500 square foot up to about 2,500 square foot. Mid bay is 2,500 to 10,000, 10,000 and up is large bay. The deciding factor in a lot of properties coming on the market and where your rent is going to be determined at is the ceiling height. A 12-foot high ceiling height is probably the absolute bare minimum there is in the industrial market today. That's an older property. It's probably a tin building. It was built back in the 50s and 60s before forklifts were present and before what's called pallet stacking was present in the industry. So your rents will range starting at the $12 square foot market and going up from there, depending upon your ceiling height. Average price per square foot on industrial space today, $148 per square foot. 5 years ago, it was under $60 a square foot. Okay. That end of the market has just exploded. The other caveat to it in Pinellas County, we have no more industrial land left. We are 97% built out of usable industrial land in Pinellas County. So where's that price going to continue to go? Right now we have a contract on a portfolio, a little over $120 million portfolio. This individual dollar averaged into his portfolio at $22 a square foot, and we're selling it for $180 a square foot. Yeah. Average cap rate, 7% cap rate. Average vacancy rate, 8.3%, and that's overall in the market. That's big, small, mid-bay, across the board. Your largest vacancy rate is in your big box space right now. The 10, 15, 20,000 square foot space not being absorbed as fast as a smaller space, obviously. Office market, worst performing sector in the market today, period, bar none, has been for the last 5 years, ever since COVID. It has recovered. It is off life support. Nobody is standing over it with a defibrillator right now trying to jump it back into life. Case in point, we brokered a 50,000 square foot vacant office building on Linebaugh 2 years ago. Today, we have roughly about 15,000 square feet left out of 50,000 square feet to be built out and to be leased up. So there's activity moving. People are coming back to the office. What you're not seeing, though, is huge firms coming back to the office. The AARPs, the AAAs of, that are based here in Pinellas County. AAA outsourced all of their teleconferencing, all of their customer support. Everybody's working out of their house. They're not coming back. They're sitting on roughly 500,000 square feet over on the expressway, and it's vacant. I walked it, 6 months ago. It's vacant. Everybody's from home. They're still paying rent on that. When that lease comes due, I guarantee you that company's downsizing. So what's happening is that a lot of these larger, let's call it conglomerate type spaces where you've had the IBMs and the Honeywells and the AAAs and all the large organizations, they're getting carved up. And we're taking 10,000 square foot plates and we're making 4 2,500 square foot offices out of them. That's where the absorption is coming, from the smaller end of the spectrum. Vacancy rate, office still in Tampa Bay area, 9.7%. I can tell you it's a little bit greater than that. I'm thinking it's probably closer to 12 to 14% in some markets. Rental forecast and growth, rents. This is an interesting slide here. If you look back to what your actual taxes are, going back to what Rocky was talking about on a few things, insurance, cost of operation of your property, what's called your CAM expenses, your common area maintenance expenses. They have risen 57% since COVID. 57%. On top of that, rents came down about 20%. So you've got a 57% increase in your cost of operating your property, 25% less on your renewals and your rental rates. It's kind of created this little bit of a deluge in the market, in the office market. That's where the most stress there is in the office market from banks right now. I also run a receivership company. Anybody familiar with what receivership is? Receivership happens when an income-producing property goes into foreclosure. The court appoints me to take the property over. The court says that, Mr. Owner, operator, you're no longer entitled to any of your money. It's not yours anymore. It goes into the courts. What the courts have found was that during the financial crisis, when all of this got started, was that owners were taking all the money, not paying all the bills, and they were fighting the foreclosure. Lo and behold, they came out whole. They got all their deposit back, they got all their money back, and then they just gave the bank back their property. They fought it for a couple of years, they didn't care. Receivership eliminates that. Receivership eliminates you being able to take the money from the property and fight the lender to keep your property because you went into foreclosure. So I come in and I take over that. That end of the market right now, the highest segment of that market is office buildings and office properties going into foreclosure. Under construction, believe it or not, we're still building office. It's 236,000 square feet still being built. Now, a little bit skewed. Some of this is the new hospital going up, the medical office buildings around the new hospital out in the Trinity area, and that there's roughly 100,000 square foot of new medical office being built. So we're only building about 135,000 square feet of office. Average vacancy rate, 10% plus. Price per square foot. This is an anomaly in the market. And as a broker, a 40-plus year broker, used to own an appraisal company, I can tell you I can't figure this out. The price per square foot on office has risen in Pinellas County. Not gone down, it has risen. In an environment where rents have come down, expenses have gone up, price per square foot has gone up across the board. Retail market, second hottest market in the area. Drive down the street and tell me if you see any for lease signs in any retail space there is up and down Tampa Road, up and down Almerton Road, up and down Highway 19. There's nothing. Rents have gone through the roof. Again, leasing. All this is included in your packet. I put together a whole package for you there. Rent growth. We've come off of the forecast of the top of COVID in this area when the market really started to recover. Things have really kind of stagnated right in this area right now. But on average, you're seeing Small bay retail, mom and pop retail stores, your average strip center, anywhere between $15 a square foot for an older unrehabbed center to $23, $24 a square foot, and these are all triple net across the board. Rent forecasts are that we're seeing a lot of asking rents increasing right now in the market. Under construction, 432,000 square feet of under construction. Some of this is a little bit skewed again. You've got 50,000 square feet going up at the Commons, larger properties, larger shopping centers, bigger anchor retail centers that are going up in Trinity and a lot of the new emerging markets in the northern Hillsborough area. Here's the thing. Lowest vacancy rate of all property markets in the segment right now. 3.6% average vacancy rate. I can tell you it's probably closer to about 1.5%. There is nothing available, period. I have a client right now that's looking for 3,500 square foot to open a high-end cafe type scenario. They're out of Miami. They have 5 restaurants up and down the East Coast coming to Tampa with their, I can't find them anything. Nothing is available in the markets that they want to be in.
Which area are they interested in?
Hyde Park market, higher end, South Tampa, those areas along that line. So, demographically. Multifamily. I threw this one in here for you, Steve. Negative rent growth last 6 months. Across the board. We manage 1,400 plus units. I own a 78 unit complex up in Brooksville myself. I can tell you that rents have stagnated across the board. Concessions are coming back to the market. 1 month, 2 months free TVs have come back. We'll pay your cable bill for a year has come back, that type of stuff. But top of COVID, we were less than 1% vacancy in Pinellas County across the board on all multifamily. And we manage a little bit of segment of everything. We manage from a LIHTC property, which is what's called a low-income housing tax credit asset, Section 8 type property, all the way to Class A type assets. I can tell you the most stress that we're seeing right now is in the Class A type assets. The properties that are $3 a square foot, people can't rent, 1,000 square foot, 1-bedroom apartment is $3,000 in downtown St. Petersburg. People they're realizing that they can step down into a more of a Class B, still have the same amenity package. You may not get your concierge garbage service and someone to walk your dog and a masseuse there on Saturdays, but that's happening, believe it or not. Some of these Class A complexes. Yeah, exactly. Again, we think right here we're seeing the top of the vacancy factor. We're already starting to see recovery in that market. We're already starting to see that instead of vacancy increasing every month, we've now stayed flat for about the last 3 or 4 months. In some markets, we're actually seeing rent growth being picked up. Downtown St. Pete, we manage about 600 units in downtown St. Pete. I can tell you that there for a while it went fell off the edge of the table and is now starting to come back up. A tremendous amount of out-of-state tenants moving to this market for the first time. And what's surprising more than anything else, and we keep pretty detailed records on everything from a data analyst standpoint from our company, is the age. What do you think the average age is for the person moving into an apartment in the St. Petersburg market is right now?
35?
20?
60. I would think it'd be younger, but you're thinking probably older.
50s.
Yeah, wow.
50s.
I was hoping.
Yep. Now, it's been in the 20s for the last 5 to 7 years in that market. But what we found is people are just done with the North, whether it be political reasons, the cold, whatever it may be. They're moving to Florida, they're moving to the area, and they're renting for a year. They want to make sure they want to be in this market. My 2 minutes up?
No.
Okay.
Keep going.
What they're finding is they're moving to the market, and they're waiting out the housing market. Okay?
Wait it out.
They're waiting it out. And I keep telling some of the people that I interact with, you're already behind the time. You're already, they're already behind. But the mentality is that the north is still so bad that moving to Florida, they don't realize that we're insulated from that northern aspect. You know, you get below the Mason-Dixon line, North Carolina, South Carolina, Georgia, you know, we're already ahead of it. We're past the bell curve already. Things are already on the recovery. North, you know, New York, Chicago, that area, they're still at the bottom of that bell curve. Again, more rents, vacancy, and this is all in your package across the board. So, under construction, 10,000 new apartment units under construction in Pinellas County right now. Okay? That's Pinellas County. Tampa Bay MSA is over 40,000. Okay? And we need it. 3.6% vacancy rate, we need it. Average price per unit, $188,000. Average price 5 years ago, what was it, Steve?
Per,
Apartment unit?
oh, probably what, 130?
Yeah, 110.
180, somewhere?
110.
Oh, 110, wow.
We've gone up $70,000 per unit across the board, on average. Now, what has slowed down is the amount of sales. There's only been 159 comparable sales in Pinellas County over the last year of anything that's 10 units or greater. We don't count duplexes and triplexes and that type of stuff. So.
What happened to 20,000 a door?
That's how old me and you are. So, people ask me all the time where I think the market is going and what I see for a forecast in the market. The anomaly of our market has been COVID, right here. 20, 21, 22. What happened here? PPP loans, free money, recovery money. You have this trailing effect and this lagging effect of about a year. And then all of a sudden, cap rates went over the cost of funds and went under the cost of funds. Historically, investment real estate has always been an arbitrage. You were able to borrow at 6% and buy a cap rate of 8%. The more you borrowed, the more you made. I remember buying one of my first apartment complexes down on 38th Avenue. I borrowed at 5.5% and I bought it at an 8.5%. I made a 3% arbitrage spread on $1 million and I didn't have to do anything. All of a sudden, all this free money hit the market. 22, 23, 24. All of a sudden, we peaked. Cap rates under the cost of debt. Well, now we've come back into the rationalization. Cap rates have pretty much come back to par, and people are pricing debt at par on cap rates. And for the first time in the last 4 years, I'm actually seeing cap rates over the cost of debt hitting the market again, especially in the retail, office, and industrial markets. Apartment markets are still unrealistic, let's put it that way. Why real estate investors stopped buying? Why'd we go through the 22, 23, 24 phase? This is it right here. This is your cap rate versus your 10-year Treasury. COVID hits. Interest rates go up. Treasury goes up. Cap rates come down. And we hit the inflection point. You can't borrow money for 5% and pay for a 3% cap rate property. You're negative 2% every year. Doesn't work. So hopefully we get back to more of a historical average. In the last 30-year average mortgage rates have been an average of 7.75%. Well, we come down in here and we bottom right about here on 0% interest rates, 2, 3%, and all of a sudden we spike. We come back to almost a normalized market. My personal opinion is I think that we're probably going to see interest rates come down another 50 to maybe 75 basis points within the next 12 to 18 months. But I don't think the Fed is ever going to take us back to here during our lifetimes. And let's hope they don't, period. Because this was unrealistic. You couldn't sustain this. Pricing power got from here to here overnight, and it just wasn't sustainable across the board. Questions? Okay, there's a test.
Do you have any comments on the self-storage market?
Yeah, hot market. What you're finding is that self-storage developers have started to partner with apartment developers. And where the guy that comes in and builds 400-unit apartments, I guarantee you he's also partnering with the guy that's building 200-unit mini-storage right next door. Because he doesn't have to put a garage on his apartments, because the garage doesn't rent for a price per square foot that apartments do. So now he's partnering with the guy next door on a mini-storage.
It's actually pretty smart.
Yep.
And these are for new builds.
Yeah, new builds. Yep. Yep. So we've got a master plan development going on in Citrus County right now that we're part of. And the developer that brought us in, when we first went under contract, this is a 500 single family home development. We brokered the land for it. He said, go buy this, and go buy this for me. I'm like, okay, what are you going to do with that? He says, just go buy it. Just get a hold of people, we're going to buy it. Got a hold of two of the three people, we're working on the third, and bought two of the projects. I said, what are you going to do? I said, well, first is going to be a mini storage. People need a place to put their junk. Second, what's the second one?
Or maybe a gas station.
Gas station. Yep, gas station. Yep.
Makes a whole lot of sense.
Yep. Yep. So what's happening is that the larger developers are taking a hint from government planners and developers in that they're actually creating their own individual communities. And when you see people like D.R. Horton and BlackRock and all these guys that go out and buy 10,000 acres of land and they build 3,000 homes, well, they're also building 1,000 apartment units, 2 gas stations, a 300,000, 400,000 square foot retail center. They're not selling that land off. They are part of it. They've come to realize that they are the driving engine that is driving the economics for all of those other subcategories. Anything else? What can I help you with? CJ.
What's your opinion of the sustainability as far as growth for Pinellas County? I mean, we've been the most densely populated county in the state of Florida for I don't know how many years, but a lot. And
Yep.
Just looking at multifamily and what you were talking about, 10,000 units or whatever under 1,000. What are your thoughts on that? Just from a
Well, for one, it's needed. You know, there's a couple of projects I'm involved with right now, and I'll give you an example. One of the best things that's ever happened to the state of Florida is the Live Local Act. Everybody familiar with that at all? All right, Live Local Act is a way for developers to go in and buy a property that is not zoned residential, industrial, retail, whatever, office buildings, whatever it may be, and apply to the state of Florida to apply a residential density and have the zoning changed at the state level, not the county level. It bypasses all the county commissioners with all their hands up and their hands in their pocket looking for a donation because he's running for election, you know. So.
I don't have my hands out.
But anyways, it bypasses the state or the county regulations. We have a project right now in Pinellas County. It's a 7.4 acre industrial site. It's been underutilized for, I can't begin to tell you how many years. If I told you where it was at, you'd know the property right off the top of your head, right off the bat. That property right now today brings in roughly about $100,000 in property taxes to the county. We just got approval to build 420 apartment units on it. By the time we're done, that project will bring in over $1 million in property taxes to the county. Okay. So the Live Local Act is been a boon for the development and for low-income housing or more affordable housing more than anything else.
How does that relate to opportunity zones from the federal level and what?
It all rolls over. There's really not any benefit of going into an opportunity zone with it. It's more of that you're able to take an old underperforming industrial park that has outlived its useful life and create value to it by changing the use of the land. You know, you can't go in and buy a 10-acre industrial park and bulldoze it and build a nicer, better industrial park there. The economics don't work. But I can buy a 10-acre industrial park and I can build 500 apartments on it, and the economics work. You know. Harvey.
State your name and
Yep.
what's your question?
Harvey Kitzman.
Yep.
Just to follow up on what you were saying earlier, do you see the office buildings coming back, or do you see that more being, I guess, subdivided into smaller units? The reason I ask that is because I know, from COVID, I know so many people who, work from home, and I was in Austin for many years, and they had Dell had a huge complex.
Yep.
They sold off the whole dadgum thing, they kept one building, and they used to have like 20. They used to have a shuttle bus between all of that.
Yep.
And I mean, Dell was the driver, the economic driver for Round Rock, Texas, which is north of Austin. So I was just curious
Right.
what your thoughts were. Just
Yeah, so other than the conglomerates, like I spoke about earlier, other than the Honeywells, the Apples of the world, people are coming back to the office.
really.
Yeah, and most employers have realized the productivity is not there with remote workers unless it's a customer service call that is, hey, how can I help you with your insurance policy today? But if I got to come to your office for a service, my industry is probably the primary example of that. At one time, I owned an organization here called NAI Tampa Bay. We're a franchisor of a master company called NAI. And we're a global company. I own the NAI Tampa Bay franchise. I had 41 brokers working for me at one time. Had 6,000 square foot of office space on Seminole Boulevard. I don't need this. Why am I paying $1.5 million to have an office space when these people can work out of their houses? And our industry kind of led that way. The real estate industry led that way. Employers are realizing that now. And even though they're coming back to the office, it's a much more condensed workspace. People are going back to private offices. There's no more bullpen areas. Everybody wants a private office, and you've either got one or two people in those private offices across the board. So, but to answer your question, yes, it is coming back, and it's coming back strongly. Anyone else?
I'm an LP on a couple multifamily deals now, and I would say they're underperforming. I'm interested in, maybe getting some GP equity in some deal, but I'm a small investor. What do you think a path could be for a small investor to get into some of these opportunities, especially in the small bay space?
You got to look for guys like me. We run a small fund on top of that. We haven't done anything in a while. We're getting back into it. The 78 units we just purchased in Brooksville is our first purchase in 5 years. I sold my entire portfolio pretty much at the top of COVID. We own 300 apartment units, 2 office buildings, a retail center, and an industrial complex. Sold everything. Just been sitting on the cash, waiting for the market. And we did fairly well. Not as well as I thought we would. I was expecting a 40% correction in prices. We got a 25%. I'm happy with that. But it gave us enough fresh powder to sit back and wait. And the opportunities are now coming back. The opportunities were before where you saw that inflection point with cap rates over the cost of debt. That's what I'm waiting for. When I can make my arbitrage spread of 150 basis points or more, I'm getting back into the market. During the financial crisis, 2008, 2009, is when we first started our first fund. We flipped 42 properties in 3 years and brought in, guys with a couple $100,000 here or there. I put the majority of my money into it, and we did very well. We made a little over 400% return on our money in about 3 years. So, Not looking to get rid of anything. Value add apartments, value add industrial. We like to be able to bring our management team in and correct the problem. Bring me the ugliest property on the block in the best area, and I'll buy it overnight. I don't care about cap rate. I look at the value of the asset more than anything. Cap rate matters to a point, but at the end of the day, if it's undermanaged, it's under cap rated. So that's the way we look at it. What else? Anything else?
One more question.
One more.
Do they have the burning is,
That's it.
burning is, I'm gonna take this camera out, man. Burning desire.
I have lots, John, but I'd love to talk to you more.
Yeah. My contact info's in there. Feel free. Give me a call. So.
Thank you very
All right.
much, John. That was
Absolutely.
awesome. Thank
Thank
you
you.
very much.
Well,
Good round of applause.